What's up, everybody? Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy daily stream. If you don't know, now you know. My name's Kellam. Welcome to the show. If this is your first time, I can guarantee you it's not going to be your last time. We break down everything in these charts, from the context to broader markets, what's going on with monetary policy. But don't worry, we don't get abstract. We don't get so where it's like, what the hell are you talking about? We break it down. We bridge that gap from beginner to pro, so you know what to look at, you know how to look at it, and you know how to enact a strategy that can help you navigate these markets so the markets don't navigate the money out of your portfolio into somebody else's. This is all about understanding what's going on, breaking down alpha, but also throwing that rope back to beginners so they can come along and understand what's going on. Because let's be honest, with the crypto asset ecosystem, the majority of people in this have very little real world experience in investing and trading, and far too often people jump in and they see other people trading and they just start trading right away. And as you'll see in an interview that we're putting out tomorrow here on BitLab Academy, as well as on a clip of it on BitBoy Crypto, 90% of traders lose 90% of their money in the first 90 days that they start trading. So how do we make sure that we can look at this market and not get trapped in buying the top of a green candle and selling the bottom of a red candle? Strategy. It's all about strategy. So I hope everybody's feeling well. Throw a 1 in chat if you're feeling grateful today. Throw a 2 in chat if you're feeling a little bit of a weight is off your shoulders. I don't want to get into it too deeply, but we are a family. We are all in this broader community within the HIT Network. Ben, BitBoy, put out a message yesterday sort of addressing some of the things going on, and it's my hope, again, we're an island here. This is all about encouragement, education, and community within BitLab Academy. But there's been a lot of questions around, and I don't think every question is going to be answered, but Ben, I got to give it to Ben, and I love Ben. I appreciate so much that he addressed some of the things, and, him and TJ must have been talking a little bit. I'm in New York, so I'm not even fully aware of what's going on. But TJ put out the video Ben sent them, and he kind of took a little bit of responsibility for some of the things going on, and that doesn't clear the air on everything, but that's for them to decide, and that's for them to navigate. And I'm just happy that a little bit of the tension is off now. And I just want to say I love everybody. I shared a tweet this morning. If I can find my Twitter, I shared a tweet this morning, and it's essentially this tweet right here, and it says, "A new day, a fresh start. Let's all start the day with forgiving people in our lives, and remember, forgiving ourselves." Good morning, everyone. I'm grateful for every one of you, even the delightfully entertaining trolls out there. I love you all. I appreciate you all. Now let's go ahead and dive into what's going on here. Again, everybody goes through different things, ups and downs, and people's, decisions have to be made, and sometimes decisions are rash, sometimes they're not. But on all accounts, everybody deserves forgiveness, everybody deserves kindness, and everybody deserves a little, compassion. So with that being said, can we be compassionate towards Gary Gensler? I don't know if that's possible, but I just said everybody deserves compassion. So we got to talk about it. ETFs, everything being denied. Market took a little bit of a tumble, but interestingly, there clearly was some forewarning for some people, because if we look at the charts, coming here right onto the chart, all these lines, everything, what's going on? Well, we had this huge sell-off. We had this huge pump right here, which was, of course, the Grayscale winning the lawsuit against the SEC. And as I discussed yesterday, this was a sentiment boost because it didn't change anything fundamentally. Everybody says, no, you cannot be compassionate towards Gary Gensler. With Gary Gensler, it's a repeated thing, and he's just, it's nonstop, just shenanigans with him. But if we look at what's going on here in the chart, sentiment pump right here with Grayscale didn't change anything fundamentally. We had a little bit of a consolidation sideways and a little bit of a trickle down, but we also know that we had this downtrend resistance above us. But in addition to that, when we're thinking about everything going on here, we had this large sell-off starting yesterday, about 11 a.m. into 12 p.m. And this kind of front ran all of the news that was happening, all the news that came out with the ETFs being denied. So it's kind of, you know, one could argue that there was some inside knowledge there, but also, you know, we talked about this. We can't just get speculative and trade on speculation. This was a very inefficient move to the upside, rejection, consolidation, and then an equally, you know, inefficient move to the downside, basically eating back up all the lack of liquidity or lack of, you know, buying and selling at levels here. This is just boom to the upside and then boom to the downside. Where we came right back to this equilibrium that we've been talking about for, you know, I mean, look at this teal line right here is the point of control. The highest amount of volume traded is exactly where all this consolidation is. And that makes sense. They kind of go together. When you're having a lot of consolidation at a level, that's where you're going to have the largest amount of volume. Where did price come back to? Boom, right to that level. In fact, we created another order block right below us, and we're testing it right now. So we're going to dive into this. We're going to be talking about, we're going to talk in a lot of TA, breaking down the charts, breaking down everything going on. And I just want to welcome everybody here again, back into the BitLab, back into the community here on a Friday, going into a holiday weekend. And again, if this is your first time, my name's Kellam. Welcome to the show. Let's go ahead and talk about what's going on here. What is going on in these markets? Well, let's first, if you haven't yet, by the way, hit that like button, hit that subscribe button, ding the bell, and let's talk about what's going on here. First things first, make sure you're following me here at Kellam, K-E-L. You can see my name right there next to my face and my shoulders. Make sure you're spelling it correct. Look for the blue check, look for the hit logo. Again, I only point these out not because I'm driving followers to my channel, but to my page, but because there's so many fake accounts out there that make you think they're me and then talk you into programs and this and that, and basically it's just stealing. Make sure you're following the correct Kellam, and then make sure you're following the correct BitLab Academy. Look for the orange, yellow check and the hit logo here. Hit that follow, hit this retweet, hit this like. You're going to be entered to win. We will be drawing on Monday. The reason I'm doing it on Monday, not Friday, is because we got a video tomorrow, and I want to be able to include tomorrow's video. So make sure when I do post the promo for that, you know, the link to the video on BitLab later today or tomorrow morning, make sure you can also hit that follow, hit this retweet, hit this like here on the @Academy BitLab to be entered to win also. Now, one of the things I wanted to talk about here is this right here with the Plan C, the real Plan C. It's lovely to see him starting to get active again. He kind of took about 6 or 8 months off from being active, posting on-chain charts and on-chain metrics and so on and so forth. It's nice to see him getting back into the swing of things here. What I want to point out here is on this chart, we've got the 0 to 2 year holder cost basis and the 2 to 5 years. So the kind of short term to medium, like almost no term, you know, 0 to 2 years, very short term to sort of medium term holders to, you know, medium to long term holders. And we're seeing two different cost bases here. Is that how you say basis, plural bases? And interestingly, when we have this price action fall below this 0 to 2 year holder cost basis, excellent time to accumulate. Excellent time to start accumulating. Now, in this case, it does fall further. Now, over here, we actually see a difference here as the market matures and the behaviors of people change as well. And we're seeing a lot of people, I mean, look at all the price level below this. This is why you don't use one metric that you find, because behavior changes over time, and you want to compare different metrics with your technical signals to identify those, you know, excellent accumulation zones. But what we're looking at here is this pinch that we get, this pinch that we get, this pinch that we get. What am I talking about within the pinch? It's just a funny phrase. The pinch I'm talking about is this medium to longer term holder cost basis. As this averages up, this move up towards this 0 to 2 year holder cost basis, each time the low has been put in back here, and we get a little bit of a push up, sell off accumulation, and this is where we're getting that pinch, ultimately leading into where the halving is. And not only the halving, but then also the start of that parabolic uptrend. Now, of course, we have the low put in here. We see the cycle low, and then push up, sell off in the consolidation phase. And in this case, we had the global economic shutdown. Had we not had that global economic shutdown, this likely would have had a little push up, a little sell off. Basically, we would have marked this sort of accumulation zone with some price action to the upside and price action correction back to the downside, ultimately leading into that next halving, which was, you know, roughly about here, and this pinch happens. So look at the pinch in this case. The convergence of these two lines, that's what I'm referring to when I say the pinch, ultimately creating that base that launched up into that parabolic uptrend post-halving. Similarly, we have the cycle low here on this current cycle, price action push up. In this case, price action, look at this. In this case, price action is pushing up and being basically finding resistance on that 0 to 2 year holder cost basis. And we're actually getting pinched between. So this is different behavior. But every cycle, we're going to have similarities and we're going to have differences. There's going to be different economic pressures. There's going to be different global economic situations, different wars, different economic stimulus, different foundation of what's happening with monetary policy globally. Different elements and pressures and scenarios for the behaviors of, sorry about that, and behaviors for different types of holders within the Bitcoin ecosystem, meaning large wallet addresses over 2,000 or large wallet addresses over 10,000 or accumulation or net flow of coins moving onto exchange or off of exchange. The scenario for which there's liquid or illiquid supply and what that is, balance on exchange. Based on what's happening within the macro environment for Bitcoin, and thinking about what happened with, overall of 2022 with the cascading failures from Celsius to Vanguard to Vanguard. I can't remember the Valkyrie. I can't remember. Something that starts with a V. Large institution. That's adjacently part of the Bitcoin ecosystem. Is it Vanguard? I can't think. You guys let me know in chat. I cannot remember the name. Going through too much data this morning. But we also had Three Arrows Capital, then ultimately FTX collapsing. A lot of coins moving off of exchange. People understanding on-chain data is becoming more known. It's not massively known, but more broadly known through the ecosystem. People can follow the behavior and see what types of behavior, what parts of the cycle make the most sense to make the most money. And we're seeing the strength of long-term holding through cycles and taking some profits from portions of your portfolio at different levels in the sorry, something was on my foot. In the market cycles, so you can hedge yourself, but also still have exposure. There's so many things happening broadly throughout this market, and so we're going to have different behaviors throughout. In this case, we pushed up, got rejection, pushed back up, found support back here before the pinch, and then started moving up. In this case, we broke above, came back, broke below, and wouldn't you know, we found support, rejected, broke above, found support on it, and consolidated right at that level before we moved up. And this time, we did push up, lost it, and this time we did neither. So we're getting a very, almost like a median. We're finding a median here between these two different cycles where we didn't break up or fall below. We're getting pinched between. We're literally doing almost like a division of the two different types of behaviors we have from the two previous cycles. So it's going to be interesting here to see if we do break down and which in this case we have broken below 26,800, but it's going to be interesting to see on a weekly basis where price action finds itself over the next couple weeks. And if we do have behavior rather than a rejection, push up, find support, consolidation, or a push up and then loss, in this case pinch, are we going to have a little bit of a deviation below this time and not from this sort of scenario here where we had this massive sort of dip down deviation, then immediate buyback up? Are we going to break down below, find a little bit of resistance and break down from there, which would be very bearish? Or are we going to have a deviation below, find ourselves right back up here and basically consolidate a little longer? It's kind of similar to how we have here, but rather than consolidating above this red line, are we going to consolidate right at these levels, at this basically $26,000 to $28,000 level, finding our price action trapped in this sort of this convergence of these two moving averages? Well, it's going to be interesting to see. Let's see what happens here. Now, next thing I wanted to look at is right here. A little more broad economic data. Consumer excess savings have been depleted and labor market weakness is arriving just as no landing calls reach a feverish pitch. Here we go. So what does it say? Whether or not you know these charts, let's just take a peek. We're going to be diving into Bitcoin here in just a few minutes. So everybody, we got 136 people in the room, 92 likes. Everybody should be hitting that like button. We're breaking down the charts for you, breaking down what we need to be doing, looking broadly so we can look at the micro. We got to look at the macro so we can understand what the hell's going on in those smaller time frames. Now, accumulated excess savings, personal savings. This is the accumulated excess savings, this cloud here. Personal savings is this darker blue line. Here's a COVID, onset of COVID and fiscal transfers. Boom. And then we had the stimulus right here. Cumulative excess savings as June 23rd. Now look, I mean, this is where we're at right here. It's just marking the time frame where we're at. Exactly. We got this huge influx of savings. People aren't spending money. They're in their homes and their stimulus. And then look at this massive drawdown and actually below historical trend, adjusted for inflation. Look how far below this we are. And accumulated excess savings right here. Look at this. It is dropping below. It's dropping. I mean, so what does this mean? It means a lot. Labor market weakness and no savings. And here very shortly, we're going to have to see corporate, there's going to be some, not refiling. There's going to be an adjustment to the corporate interest rates here very shortly, and there's going to be a lot of pressure on the markets. Are we going to get a recession that everybody thinks that we're going to pull out of because we're getting things like Nvidia that are pumping higher? I think there's some things that we need to keep our eye on and be a little patient. Unemployment rate, 2-year moving average. Look at this. It's almost like a MACD. Unemployment rate 90-70. All the where we at right now. Look at this. Of course, everybody was out of work. There's a smaller percentage of people that were working during this time. And look at this massive drawdown. Are we about to get a move beyond this moving average, which obviously has a huge influx to the upside here? Because of this deviation, massive deviation of everybody being unemployed. It's going to be interesting to see what happens here. Now let's move it to the next thing. The U.S. total job openings. Private sector payroll growth, 3-month average. Payroll growth shrinking. So some pressures on the markets. But through all this, that big drop we just had, look at where we're at. We're sitting right, we're really hugging a narrative here for the bulls, hugging on this monthly chart for Bitcoin, right at about around the 50 moving average for Bitcoin's price. So even with this drawdown, we're still kind of regionally in a zone that all of us are hoping, anybody that has a bullish bias, which I would think is probably every single one of you here, we want it to go up. Yeah, we can make money on the way down, but things are a hell of a lot more exciting when it goes up. So let's talk, let's talk about that. It's held by Wall Street companies and governments, exactly what Satoshis don't want. Bitcoin is too institutional now. Well, there is a lot of retail. There's quite a bit of retail. Actually, if we go off this screen, I can actually pull up a metric here into the block. Sometimes I forget I'm paying for this. And just give me 1 second. I'll bring up the screen in a second. I just need to log in. Just need to log in. It's my info. Okay, let's go. Oh, shit. Sorry about that. Did you guys see, by the way, I'll actually pull it up. Did you guys see my ghetto setup? I forgot because I'm actually in New York right now. I'm not in the studio in Atlanta. This is a green screen behind me. I can, let me see. See that? Oops. Oh man, I did it again. Every time I open that thing up, it messes up my aspect ratio. There we go. Let me just make sure. There we go. So this is, I forgot my phone mount for I have a little mobile studio set up and I forgot the phone mount for my stand. And so my phone is sitting, it's leaning on some books on my monitor. But into the block, what we're going to show here, you're talking about institutional. There's going to be the question right now, everybody, everybody that's in right now, we are ahead of the curve. Stay ahead of the curve. If you're going to trade with a smaller percentage of your portfolio. Don't trade with your whole portfolio. Trade with 10%, 15%, maybe less. And do it conservatively. Don't, go 30x leverage. Unless, sometimes I do when I'm laying in bed on a Saturday and I'm watching a TV show, I'll put $10, 30x, and do little trades like I'm gambling. But I'm doing that, and it's not associated with my trading account. It's just like something to keep me sharp, and I don't do it with my portfolio. When I'm trading, if I'm going to trade on leverage, I'll trade with, 2x, 5, 7x max with a very tight stop. But everybody right now, we're still ahead. Institutions are starting to pile in. They are. Banks. The onslaugh's going to be incredible. And, to be in ahead of these folks is don't get shaken out. But looking here, we can see, what was I wanted to look at? Ownership right here. All ownership stats. So we've got transactions. We got about whales concentration, 1.28%. This is definitely not right. This metric used to be, here we go. Yeah, so we got investor volume, whale volume, and retail volume. So we're still part of this because there's so many millions of people out there that have, small transactions and small, it really does make up for, it starts accumulating to a very large number, but this is going to be dwarfed very soon. I do think that as institutions come in, and we talk about this tomorrow on the interview that I did, that's going to be released tomorrow. It's very important to understand what you're doing in this market, especially right now. And if you don't know what you're doing, then have a longer time horizon. You don't need to trade to make money in this market. You need patience. Now you can build on that and basically stack crypto through trading as well. But if you're going to trade, you need to have a plan. And again, if you don't have any idea what's going on and you want to sharpen your skills, sharpen your sword, head over to BitLab Academy. Get involved. Hit this enroll now. We've got all kinds of different courses breaking down candles, candle patterns, trading fundamentals, psychology of trading, on-chain data analysis, indicators, not just our indicators, a bunch of different indicators, and free indicators in there as well that you can just RSIs, stochastics, Bollinger Bands, what they are, how to use them, trading strategies. Sharpen your sword before you get in there in the heat of battle, because make no lie to yourself. You're trading against the best in the world. The second you enter, you're basically entering into the absolute pros of trading and algorithmic indicators. Algorithmic trading and everything. So you need to know what you're doing and you need to have a plan. And also, if you want the indicators, you can come here to Indicators, BitLab Trading Stack. And remember, we still have this going on. I'm going to extend it another week because we've had such a crazy week. Use Give Me 30. You can get 30% off your first month of any of the different offers we have. The Pro, which has the BitLab Pro has the premium Discord, all access to all the courses as well as the indicators. This has all access to all the courses in the premium Discord. And then, of course, if you want the indicators just by themselves and not the courses, you can get it right here on the bitlabacademy.com right at this link. Use that Give Me 30 code to get involved. Now, there's so much going on, and talking about all this, we see that we're talking about the institutions getting involved. Institutions are already starting. People that are ahead of the curve are already starting to get involved. Now, the big thing for institutions, it's going to make it even easier for institutions to get involved, and large money and wealth funds and money managers and all that, is these ETFs. Now, with the ETFs, we got everything delayed. You can see right here, SEC delays ruling on Bitcoin spot ETFs, including BlackRock, Bitwise, VanEck, Fidelity, Valkyrie. That's what the V I was looking for earlier. Invesco, Galaxy, and Wisdom Tree. Grayscale's legal victory factors into the SEC's delay. I do believe so. I think Gary Gensler was like, man, I took another L. Well, it's going to delay longer. But in all honesty, I thought that I was already sort of planning on them likely delaying. 45-day extension. This is important. It's important to understand timelines. Too many people look at these charts and they look at lines and levels and indicators, and they forget about time. They forget about looking at the time of swings taking place and factoring that in. Not only that, looking here, we have this big delay in decision on the ETFs, but it's a 45-day extension, which happens every time there's a delay. There's a 45-day extension, and it can go up to 240 days. And this puts it at October 16th to October 19th. So probably right around October 17th. But further delays are possible. A lot of people believe that it's going to be somewhere in February, potentially even March, but I think that's about when that 240-day window is exhausted. As per SEC filings, August 31st, BlackRock, the world's largest asset manager with over $8.5 trillion in asset, along with 6 other Bitcoin spot applications, will have to wait another 45 days for that decision. Now, think about this. If this pump, I don't want to say was valid, but if this was a healthy pump, healthy price action moving bullishly, and not sentiment driven, then if this was a fundamental change, the delay in the spot Bitcoin ETFs would not bring this right exactly back down to where we were before. In this case, we're dropping right now. And on the 1 hour, this has been red. This dashboard here on the BitLab Trend Fuel, if you see here on this chart, this is the BitLab trading stack. This indicator here, the BitLab volume right here, which gives you the volume profile, as well as auto-populating these order blocks with levels to be watching for, high liquidity zones, as well as important levels. And then, of course, the BitLab Intelligence, which shows that we had a potential bullish setup, but none of the other markings. In this case, we got a little bit of a setup here with the bullish setup and the triangle right here, but everything is hinging on this downtrend, and we're not even breaking past this 20 moving average here. So we're not getting the three different signal setup that we want to see when we want to call a move. You don't trade just on a bullish signal. You don't trade just on a triangle. Sort of setup brewing, a supporting indicator, no third indicator. Now, in this case right here, even if you did take this trade, what do we always do when we take a trade? Say you're a little gung-ho, you see this wick down, we get the bullish setup, comes here, we got the triangle, say you took that trade. What do? Well, you always manage your risk. So say you took this trade. Say you took a long, where's the triangle right here? Say you took a long right here. Well, the candle closure gives you indication of about where you can put your stop loss. And in this case, you can be very aggressive with your stop loss and make it, very tight. Maybe about 0.5% from the low there. In this case, we do have an order block that just preceded this. So you could put about a 1% stop loss here, just below the wick here, just below this order block. Now, say you did take this will likely get stopped out, but at least you manage your risk. But what I would really say to manage your risk, not only is putting stop losses in your trades when you're entering them, but also don't take a trade just based on one signal. You got a leading signal, you got a supporting signal, you don't have the third signal. So I would not have taken that trade in the first place. If you did get gung-ho, always put the stop loss. Whether you're gung-ho or conservative, always have your stop losses in place. Now, as it stands right now, we are losing this level. We're testing down to that 25.72, where we're at, 730. So what levels are we looking at? We've lost this level. I'm looking right here. We've lost this level. Next level down is, wouldn't you believe it, right at the bottom side of these candle bodies, and also perfectly marks out the bottom side of this order block zone marked out here on the BitLab trading stack. But do I expect it to bounce? This is looking fairly bearish. VWAP's angled down. This is looking like it's, here's a weekly V-up way up here. Let's get down to a smaller time frame, 15 minutes. How you looking, baby? Look at this, pushed up right into the order block. There's an order block of liquidity right above us. Price action pushed up into it. Look at all these bearish divergences as well. We've got a bearish divergence here. Demand index, tracking money flow, bearish divergences here. All this part of the BitLab trading stack, part of the BitLab Intelligence. This indicator right here. We got stochastic hidden bear, momentum bear, on balance volume bear, demand index, on balance volume. And then right here, money flow, hidden bear, and tracking money flow, hidden bear. So basically the money flows are hidden bear, and it's pushing right into this order block right here, and it's getting rejected. Now we're on the order block below us. The VWAP is looking like it's trying to turn. We've got, let's zoom in here just a touch. Look at all this selling volume. What do I mean by selling volume? You see these bars are red. Momentum was up, but these bars are flipping red as this is converging back down, and we're seeing this expand to the downside. Why do I say that? Expanding because we see this angle getting sharper, right? And these bars are red. Money flow is still negative. And then we still have, we're on the 15-minute chart here. And on this 15-minute chart, we can see a lot. We got bearish stochastics, bearish, there's this trend wave, and then this trend wave as well, which is the money flow and the basically the momentum trend. So we're leaning still fairly bearish on the 15-minute. Let's see if the switches. We do have stop. We had a lot of volume selling here as we broke this trend signal line. We're looking at a very small time frame here. We're trying to see if this is going to potentially break lower. A lot of selling volume, but then we're getting stopping volume, but we still have 13 minutes. Let's see where this candle closes, and we can determine if this still stays as stopping volume, potentially finding a little bit of a low where we're at. We're going to back out of this. We're going to come back to TA here in just a little bit. We got to go through a couple more stories here. We got to go through a couple more stories here, and we're getting all these things. Anyone really think Gensler wasn't going to delay for the sake of no, everybody was going to delay. Next dates to watch, middle of October, and the next major days to watch, namely October 16th to the right. So, dang it. So around the 17th. Also a reminder, we fully expect delays on this round of spot. Yeah, because so that was before. That was even before this came out. So next one right here, Bitcoin, Ethereum trading volumes headed for the worst quarter since 2019. What are they talking about? Over the previous 2 months, Bitcoin saw trading volumes of 45 billion and 354 billion respectively. If conditions remain unchanged and September's volumes hover around 350 billion, the quarterly trading volumes will come close to 1 trillion. For comparison, last quarter, the total quarterly trading volumes were 1.25 trillion, marking a potential 14% decline month over month. CoinGecko data shows that the total trading volume for Bitcoin in the first quarter was 41 billion. That's, you see, regardless of the numbers, look at how high the trading volume got here. Boom, boom, boom. I mean, it's going down just ridiculously. This is the first quarter of 2021. And then it drops, moves up just a touch. Early 2023, even with that big pump, we had the first quarter of 2023. Look how much smaller the volume is. And there's more Bitcoin out there. And there's more people out there trading. But what do we know? We also know that there's a huge amount of Bitcoin that is basically held in private wallets, cold storage, off exchange. Illiquid supply is incredibly high. In fact, let's come over here to, I'm going to go to my face. We're going to log into Glassnode real quick. We're going to look at the exchange balance right now. I know is you would not believe how low the exchange balance is right now. And this is a good thing. It's not a bad thing. I'm not complaining. It's incredible the price is doing what it's doing right now in the factor of not moving up because everybody's sitting on the sidelines right now, waiting for a little bit more of the uncertainty to shake out, a little bit more of the last bit of weak hands to get shaken out. But the lack of supply available on exchanges is remarkable for how little price action we're getting. And if we come back here to Glassnode right now, we can scroll down to, no thanks, I don't need to do it. So many surveys on all these different things. Let's go straight to the face. We're going to be looking at exchange balance. Where's exchanges? It's percent. 11%. That is, it's incredibly low. Now, look at this. Even with the sell-off, let's kind of zoom in here. Even with the pump up, August 31st, we have minus 300, August 31st, which was yesterday, we had 37 Bitcoin come off of exchange in the light of having this price action. Where are we at? We're on the 15 minute. Let's go to the 4 hour. So we had this drop yesterday, and along with this drop of consolidation, we still had coins coming off of exchange. This is incredibly bullish. Now, does that mean, am I saying price cannot go down? No. I'm saying the further it goes down with these metrics as they are, Bitcoin is setting up for such an incredible scenario going into this next halving, with the ETFs all lining up to likely be approved somewhere, if I had to guess, somewhere between December and February. In addition to that, we have such low liquid supply on exchange. So the supply is not there, meaning that there's exponential value and effect from the demand when it does come in, because there's less available supply to buy from on exchange, causing more of an impact to price when that impact does come. So whether or not price action finds a bottom here, $25,500, or down here at this larger trend line that we have that goes all the way back to December of 2022, whether or not we find a low anywhere in this region that we're at, or drop lower down in this order block here, $23,700, or even scare the bejesus out of everybody and come down here into the low 20,000s, 21, 22,000. The golden pocket of this major move that we have from the bottom to the top of this move. The golden pocket is right here on the top of this block right here, which is basically $23,000. Even if that were to happen, it only gives more credibility to the potential of what's going to happen post-halving. You have better opportunity now than you've ever had in your life. If we come back over here to Bitcoin, we come up to my favorite, the on-chain metrics here, come down to reserve risk. We can see right here on the reserve risk metric, zooming out, we can see how low we are. What is this? This is a measurement of the price divided by the HODL bank, the strength of the market, people that are holding, not willing to sell. This is showing you how much risk is in your investment as it relates to that ratio. And you can see when price action comes way down, here, and this reserve risk metric comes very low, this is proving to be excellent opportunities. Global economic shutdown. Even a better opportunity here, even though the price is higher than it was here. Look how much further the risk metric came down. This means the asymmetric risk opportunity, meaning the reward over risk that you're the potential reward versus the risk you're taking on based on the metrics and supply and demand and what's going on with how many, the strength of the HODL bank, the people that contribute to the most strength in the market. You have a better opportunity here as it relates to risk than you did here. Where we're at over here, price is higher. Look at how deep the risk metric is here, the reserve risk metric. Has this pushed up a little bit? Yes, but look how much lower this is than back here on either of these 2 points. We are setting up for a better opportunity than we've ever had in crypto, regardless of if you've ever considered, oh man, I wish I bought in 2012. I wish I bought in 2014. Well, you had to be a bit of you had to be out there to buy back then and hold from then to now, because it wasn't proven yet. Now, I'm not saying it wasn't a good opportunity back then. It absolutely was. But you also were exposed to a lot more risk because the history and the time in operation and the, being spoken about on every government body's floor in the world right now, G20 summit, House of Representatives, I mean, this is debated in government every day. And we're right on the cusp of having huge Bitcoin spot ETFs that give, fund managers and retail and institutions alike direct access without having to go and buy in exchanges, easy access. This is the best opportunity of our lives. This is why I don't give a shit where price action goes from here, below here, because anything at this level or below, every dollar it goes below is a better opportunity going into the next market and the next market cycle post-halving, so long as you have strategy and conviction. Now, this is not financial advice. This is sharing the data based on what's going on with the markets. Now, say what happens post-halving, we get some anomaly, which could happen, where we don't get a huge parabolic run and price action goes sideways and we have a little bit of a push up and then a big drawdown. Say, let's entertain the notion. Let's entertain the notion that we get a lot of government body pressure and we get weird regulation that comes in, and BlackRock, crushes price and just really, institutions hold price down for the better part of the next, year and a half, 2 years, and we don't get the bull run in 2024 and 2025, which could happen. I'm not betting on that, but it could happen. It doesn't change the fact that there's only 21 million Bitcoin that will ever be created. It doesn't change the fact that Bitcoin is a better opportunity, is a better system than the fiat systems that we use. It doesn't change the fact that we are still early, and I really can't imagine a system, a world where Bitcoin does not exist, other than a world that, the internet and electricity stops working. Sure. But that's coming out of that's coming out of left field. That's such a small potentiality. We are still early. We still have opportunity. It doesn't matter where price goes now, so long as you have a strategy and you have patience. So let's kind of dive in here. We've gone through a number of these other stories. Bitcoin net flow soars high. Okay, we talked about this. Bitwise did withdraw their application. We don't need to go into that story. Let's talk about TA. You guys want some TA? Everybody throw in chat right now. If you want some TA, if you want some TA on everything going on, let me know what coins you want to see. Let me look at my little super chat area, which I can see. Okay, didn't get any super chat, so I didn't miss anything. All right, we got 187 people in the room. Everybody hit that like button, hit that subscribe button, ding the bell. Make sure you head over to my Twitter page right here if you haven't yet. Give me a follow. Make sure you're following the correct spelling. Link is in the, somebody will post a link in chat. And then, of course, make sure you're following BitLab Academy right here, and hit that on this tweet, these daily tweets. Hit that follow, hit this retweet, hit this like. You're going to be entered to win. Let's do some TA, turbo TA time. Let's get down. Let's go to the 2 hour. Let's go to the 1 hour. We're going to do some smaller time frames today. We do a lot of macro, midterm, and 4 hour and 12 hour. Let's look at the 1 hour and the 24 minute today. We're going to see, where do we think price is going? By the way, if anybody wants these indicators, we're using the BitLab Trading Stack. Head over to bitlabacademy.com, and all you got to do is go right here to indicators. BitLab Trading Stack brings this up. Hit this button right here, and you can use this code GIVEME30 for 30% off your first month. Now, where are we at? Where is my chart? Okay, look in here. We got deviation above, rejection back down. And now, what did I say yesterday? I said there's a pretty high possibility with this attempt by the bulls that got rejected, that there was going to be a liquidity attempt to the downside to see what can be washed out. Commit people to going short. Commit people to being scared. Maybe not even going short. Somebody bought here, and there's at least one person in the world, probably more than one, probably more than 1,000, that bought this on the hope that no, I don't want to miss it. And then somewhere in this sell-off is selling, which is the stupidest thing you could do, especially where we're at right now, pre-halving. And we've all made stupid decisions. We've all made bad trades. We've all bought the top and sold the low. Let's not do that. If you bought the top, especially with where we're at as compared to coming up to this next halving, if you buy somewhere up here, you don't sell down here. If this price comes down here, you lower your average entry by buying again. That is a strategy advice, again, not financial advice. So looking at this, pushing up into the BitLab Intelligence dynamic resistance zone. It did break above this 20 moving average in this EMA ribbon. Pushing up, could not quite get to the trend signal line. Rejected down. We're holding right on this low. We had a wick down. It's interesting. Look at this. We had a wick down to this low-ish zone right here. And we're attempting to get people to commit short. They're attempting to flush out some longs that bought in this region. It's not happening yet. Bulls are defending it so far. What happens if this does break down? This is the next level right here, 25,321, which is essentially that long-term rising level of support that we already tested right here, almost to the line. And remember, we've had this line drawn for months. This gave us an idea where price could go. Is this going to find support here again? Maybe test down a little lower, 25,194. Let's see what happens if this does break down. This is still looking somewhat questionable. If this price action cannot find its way back up to this equilibrium, we're gonna have to see what happens, because we're seeing a lot of these attempts to the downside that are getting bought up. I'm not going short here. If this does come down here and lose this level, 25,300, and it actually loses the level, I would look for a little bit of a retest back here to this zone, and then a continuation possibly down to 24,300, and ultimately probably into the upper 23,000s. The question is going to be, are there going to be buyers here? Let's look at the velocity when this happens, and if there's a quick buy up getting us back up, or if this is going to really flush people out and potentially even come down and close that CME gap down around $20,000. That's a little bit less likely possibility, I think. But you have to also imagine the BlackRock sentiment that got us up is gone. The Grayscale sentiment that got us up is gone. The bulls are getting weaker. But there's a huge amount of long-term holders that are going, there's somewhere in this level, we're gonna have to figure out what it is, that buyers are going to come in and take advantage of those prices. And so let's see what that level is. Caution right now is the name of the game. Ethereum, same thing. Same thing here. We have the level, this level right here. That's interesting. Right where this bounced, this is right where we're bouncing currently. If we lose 1620, I do think we're going to test basically 1600. In that case, we're going to have to see, because we already have this wash out to the downside and move back up. Is price action going to be bought again here? On the 12-hour, all bearishness on the 12-hour, other than the RSI, because that's kind of, it is quite low. Yeah, momentum starting to roll over. 4-hour momentum looks like it's kind of trying to expand downward. So yeah, man, it's attempting this bounce. I mean, this is just a caution game right now, everybody. I would set a buy order, if this does come back down here and test this, I think this is coming down here to this $1,600 level. And I think there's going to be a test to the downside. I still think that we're going to hit this 1544 sort of zone on Ethereum. If we do push up, we get it, move back up. Remember, I'm not counting on it, because the bull sentiment is kind of evaporating at the moment, unless we get some massive change in narrative from a news event or Gary Gensler or a large institution that we could only hope for buying, but we can't trade on that. This is leaning bearish. I could see an attempt potentially up to this trend signal line 1650. Ultimately, that's also at the point of control. I do think that if we get rejected anywhere in the zone, I do think we're again coming down to 1600 and likely coming down to 1544. I know yesterday the mod sent me that quant was something, and I forgot to look at that yesterday. So on the afternoon stream, let's go to futures. No. Cardano. We're on the 1 hour. Or is this from some of the, by the way, one of the best parts about the whole BitLab Academy is the community we have in the Discord. I share charts in there, breaking down certain things, and you get that when you sign up for the all access or for the BitLab Pro. But with the BitLab Pro, you also get the indicators, just so you know. And everything's reduced about 30% every month, but you can also use that coupon code GIVEME30 for another 30% off your first month. So you get a huge deal with that. So in the Discord, I was sharing some charts about some setups going on. In this case, this did have a bit of a bounce. I mean, this move is a 7.45% move. Let me see, a bit of a wick there. Now, yeah, this is looking weak. Attempt deviation above, loss of level. Loss of level. We have an order block directly above us, 25 cents. If we lose 25 cents, I think this is it's going to be a little bit of heartache for people in the Cardano community. If we lose 25 cents, I think price next is 24.2, and then potentially down to the mid 23s. Let me see. Yeah, the mid 23s And ultimately, will we get down to the 22s, which I called for earlier this week? If we lose 25, the ultimate target would potentially, if bearishness really comes in, is down here into the 22s, which would be a phenomenal buy for Cardano. Would you buy at 22? Everybody in the chat right now, let me know. Would you buy at 22 cents? Let me know your thoughts. I would be, I would definitely be buying some at 22 cents. If we do push up, weekly VWAP essentially, and the point of control are right at this price level right here from which we broke down, which is 26.5. That would be pretty strong resistance. We have an order block right above that. I know I said I'd do quant. I mean, look at this. This is just, almost have another trend line here. Got the reversal call, boom. We had 6 bullish divergences there, which this is a bullish signal. And then we get a bearish signal out of it. We had 6 bullish divergences. It only moved up to this trend line, got rejected, and we're losing this zone. So if we lose right here on quant, which is 98.86, I do think that we are coming down. Man, let me get some more clarity here. If we lose 98. If we lose that 98.86, I think we're coming down to all the way to 98, down basically the rest of the dollar to 98. And then ultimately, if we lose this level, I think we're coming down to that 95 region that I've had marked out for some time. I had it marked out all the way since June. And we've already tapped it once. So are we going to tap that $95, not 95 cents, my bad, $95. Are we going to hit that $95? 196 people in the room, only 131 likes. Everybody hit that like button, hit that subscribe button. Join us here. We've got a wonderful community, and we're breaking down news and charts. We do a hybrid, and then that's a morning show. In the afternoon at 3 p.m., we do that as much as often. It's not every day. We break down just charts. So I will say on the 1 hour here on the BitLab Trading Stack, look at all this bearishness. Just flipped bullish on wave 1. So what is this? Let's see. Getting a little bit of is the money flow starting to tick up? Money flow must be coming in a little bit. On quant, what I'd be looking for is breaking really back above $100. Breaking back above $100 and then really back up above this zone right here, $161. $100, 62 cents. Really, I'd like to see this if this does break up, really get over 101. That would be starting a trend reversal. As it stands right now, everything's so bearish. I think this is more likely than not. Look at that. We had 2 bearish divergences right before this breakdown here. I do ultimately think this is going to get rejected below $100 and test this again, this 98.84, and come down here. This is going to let us know, $98 even is going to let us know if we're going to be testing down towards 95. Well, let's see. Link had a big day the other day in terms of the news that came out regarding integration with Swift. They had a successfully, I think it was 6 different currencies transferred between 6 different blockchains. Is Chainlink going to be integrated in the Swift system? That would be massive. We got a little bit of an inverted head and shoulders potentially forming here. This would be bullish. What do I mean by that? We got a little bit of a shoulder here. We got a head right here. Are we forming a shoulder? This is not yet, because all we have is the first 2 parts of this. We got to see what happens here. Does this find support on this trend signal line right here and round out back to this, ultimately this neckline? If so, we're going to be looking at a target a little bit higher, but we're going to be looking at some resistance right here at this order block, and the ultimate target on this would be, let's see, this would be a bit higher, all the way up here. Where does that, look at this. This target takes you directly back to test of previous all-time highs. So if is Link going to trade counter the market? That would be interesting, because Link, a lot of times in these different parts of the market cycle, everything will be moving, and Link will feel like a freaking stable coin. If you've ever felt that before, if you've been holding Link for a long time, let me know if you've been like, God, if Link would only move and everything's running, and you're like, oh, do I move out of Link into this other thing that's been running? Well, first off, if something's running, you don't move into it because you already missed the move. This is setting up potentially right now to maybe counter the market. But right now, it is not fully set up. We still need a shoulder in order for that to be the case. All we're doing right now is identifying that something that could be setting up for something to happen. You don't trade on what could happen. You trade on the setups that are showing a lot of different evidence and data. A lot of different data that is supporting the probabilities of a move. As it stands right now, we have a push down. We found support on this level because we also have a bit of a head and shoulders right here that we did break down from. So we're getting a head and shoulders with the target down. Let's look at this. It goes a bit lower. Actually, it'd be from the neckline, which takes us right into this order block right here. So is this showing? I mean, this is a larger head and shoulders than this sort of inverted head and shoulders. So what we're seeing here is indecision. You don't only look at the signal you want because it supports your bias. I saw the inverted head and shoulders. I zoomed out a little bit. I said, oh shit, there's a normal sort of head and shoulders here, which actually has a lower target, which we've currently invalidated because we did break down, we found support, and we broke back up above this neckline. The question is going to be on this neckline right here. Oops. On this neckline right here, if this can hold support here, this would basically, if this bounces on support and comes up, that would invalidate this head and shoulders that we did break part of the way down from, but we didn't get the full target. What I'm really saying is it would invalidate going to that target from this move currently. If we find support here and push back up, we would be starting to truly see the full formation of this inverted head and shoulders. But then you have to ask, is it going to break out? Because you have a pattern does not mean the pattern is 100%. Patterns, depending on the pattern, tend to be between 60 and 75%. And they're also going to follow a little bit of the context of what's happening in the market. So let's be patient. Let's be patient. Just making sure I didn't miss these super chats. I love this thing to make sure I'm not missing people's hard-earned money that you share with the channel. But all in all, this is kind of consolidating and working its way down. What do you think? Do you think Chainlink is going to push up or push down? We have two clear levels. Order block directly above us, starting at basically about 610 all the way up to 630. So are we going to push up into this zone, or is the liquidity going to be driven back down into this 570? Ultimately, I do think if we get pushed down to this 570, we'll likely go down to this 555. That's what I'm seeing. Matic, how you doing, baby? Ooh, a little bit of a ugly, not quite head and shoulders, but similar sort of properties. A little bit of shoulder, a little bit of a M formation head, a little bit of a shoulder. It's not quite I mean, it is, but it isn't because it's such an angle. But if it were, let's go a little bit conservatively, not all the way to the top there. We're going to, if this were a head and shoulders, the target would be down here at 49 cents. Do you see a 49 cent Matic? Let's go to the daily. I want to get some other levels. So this is another level. Boom. Option J. Now come back. So this is actually probably a little bit more realistic. Look at this. We're getting rejected at the trend signal line. Rejected the trend signal line. Look at this. Right around the weekly VWAP. Once we lost it, huge fall. Push up, break the 20 moving average, push all the way up, tap the trend signal line, this 50 exponential moving average, which is in bearish state right now, which is why it's red. We have the dynamic resistance zone, came down right to this sort of kind of neckline from this not so head and shoulders, but currently we're holding it. If we lose this level, I expect that we're holding this too, option J. So there's a couple bit of confluence here on Matic. Next level down would be this line in the sand, 52.75. If we lose 52.75, I think we are going to move into the lower 50s. H bar. Got a bit of a falling wedge here. Is this going to break the mold of the rest of the market too and push to the upside? I don't know. This is looking fairly... It's looking like it's kind of moving downward. If we lose this level, just trying to get some clarity here. Where are we holding? We're holding round about where this bounced here. Now, So these are the levels I'm watching below us. If we do break down, I'm looking right here at 49.27. The next level down, 47. If we lose that, then we're likely coming down into this range down here, which is down to 46. That's H bar. You guys, are you guys H bar? Well, I'm looking more locally. See? It's on the 4 hour. This is a move. If we come down here into this zone, this 45 cent, this is when things get scary on H bar. But these are the levels below, depending on if things are just slicing and dicing, this will likely come down here, you know, relatively quickly down to this 45, sorry, not 45 cents, 4.5 cents. But as it stands right now, this is looking like it's trying to hold, but I'm not putting weight in that when the rest of the market is pulling down. Now, what is it looking like on Bitcoin right now? Are we getting, let's see, 1 hour? Yeah, we're still holding. If Bitcoin starts moving to the downside, other things are really going to start, I think, doing poorly. But if you do notice something interesting, if we look over here at the totals, if we look at the totals here on the dominance, interestingly, maybe there's going to be some form of a little bit of a move for altcoins in terms of their performance against Bitcoin, because we do have this trend that it's trying to hold up in this sort of descending. If we do lose this level, if we work our way down, this is on the, let's go to the 4 hour. If we do come down and lose this level, then we can potentially be dropping down to 47%. And then even potentially coming down even lower, down to this 44%. I'm not banking on that yet. I think there's a bit of work to do over the next 2 weeks. I think we're going to see a frustrating time on price action. Actually, let me undo that. I think we're going to see some frustrating time on price action. I think we are going to see a little bit of liquidity washouts in both directions. So be a little bit patient. We can also see on AVAX, we've lost a trend signal line on the 4 hour. We're looking like this stair step to the downside. If this was a bear flag, bear pennant, this would be taking us down to the mid nines and then potentially even lower than that. There's a lot of room to the downside. And if things start getting crushed, altcoins could be really moving to the downside. A lot of the levels I just showed you are if we're getting a little bit of a liquidity washout to the downside, not if we get a crash to the downside. If we see, for instance, on Bitcoin, if we're looking here, if we get price action really falling and getting all the way down here to this 23.6, and if we lose this line right here, if Bitcoin pushes down to this level, 23.7, 23.6, okay? If Bitcoin pushes down to this level and we drop, you know, we end up dropping, I think we'll lose this quickly. If we lose this level, I think we're going to move relatively quickly down into the 22 to 22.5 range. And I think the altcoins would probably lose 20. A lot of altcoins broadly will lose 15 to 25% of their price action. I mean, because this is a 13% move down from there, and I think most altcoins, especially the smaller market caps, will lose double that, if not more. So we got to be patient. We got to be kind, right? We're talking about that all week, but we got to be kind to our portfolios. We have to be patient and let things develop and have our levels and have our stop losses at those levels, and you know, understand what your time horizon is. I'm position trading right now, so any level that gets hit, I'm not putting stop losses in on because I'm okay with prices going lower and adding to my position at a lower price. If you're a scalp trader, if you're a small mid-term time frame swing trader, then you need to adjust your strategy accordingly. Get over there, everybody, into BitLab Academy. Check it out. Check out the different things that we have here. Let your friends and family know. There's free options if they want to just get the very basics. What the hell is Bitcoin? What is blockchain? Also a crypto beginners course to get them to understand what a chart is, what candles are, you know, from the beginning. Then also, of course, if you want the indicators, you can get them right here on BitLab Academy. You just come here to Indicators Trading Stack right here. Use that code GIVE-ME30 for 30% off your first month. But with that, everybody, I love you. I appreciate you. I hope you all have a wonderful day. Have a wonderful weekend. Tune in tomorrow at 10:30 a.m. on BitLab Academy. We will be going live with the interview from, I'm not going to tell you who it's from. You'll see it tomorrow, but it's a great interview. And I look forward to seeing you there. I hope you all have a wonderful, wonderful weekend. And I'll be in the chat tomorrow. So come chat with me as that stream goes live. Everybody, Have a wonderful Friday. Adios. Adios, muchachos. Thank you for coming. Thank you for tuning in. Head to bitlabacademy.com for all the best education tools and resources and community within the crypto ecosystem. I love you guys. Adios.